I don't know if you had the time yesterday to watch the entire State of the Union message by President Biden, and it depends on where which camp you're standing on. If you are from the Democrats, obviously it was something fantastic, phenomenal, whatever. I mean, just looking at the 10 standing innovations in a matter of 15 minutes he got at the beginning, it speaks volume around what they were thinking how this whole thing was going. But if you're a Republican, man, you're totally from a different side of the spectrum here. But that's not the case. We're not here to talk about politics, but I'm here actually to look at one specific something. He said something about energy and what they're doing with Russia and Ukraine in order to actually sanction more Russia, trying to kill their economy in order to force them to stop the war. All right, but what they pretty much didn't realize by doing that, I think, with the whole council and the energy department, they didn't expect oil to actually skyrocket. And that's precisely what I want to talk about in this video, because if you are smart enough and quick enough, you can actually position yourself now and benefit a lot from what I consider this to be a mistake, pretty much, all right, or an unintended consequence, as what the Biden administration did, and they thought was something that was good, but in reality, it potentially going to hurt us a lot more. So I'm talking about the price of oil here. So let's look at how worst and bad things are going. This is the price of oil, not the price that you're pumping, at the gas station to actually make sure you have enough gas into your car. I'm talking about the price of the barrel of oil being traded between countries, on the market. And this is the West Texas. It gained 7.6% only today. Only today. It's already trading at $111 a barrel. But the reality is, it has the potential of going to 150 in the very near future. All right. And that's why I think if you are an investor, or if you are not an investor and you're willing to make kind of a decent amount of money in the very near short term, you should definitely pay attention to this, because this is how people are making money while you sleep, probably. All right. So I'm going to share with you a little bit of the reason and the rationale behind this before I get to commenting and give you some of the, stocks, or maybe how you can, invest. It doesn't matter the amount of money, but of course you have to pay attention to the fact that the higher amount of money you make, an investment, the higher the reward. This is just how investment works. So let's just listen closely and for a few minutes here on what and why oil is supposed to go all the way up to $150 based on what the Biden administration is currently doing.
Right. I mean, I think the US in particular has been very, very clear that they don't want to include energy sanctions because, again, you can see that already. I mean, the panic that we're seeing in the market right now at $110 oil, we're going to be going a lot higher. I mean, we're going to go to 150, even higher than that, because the only solver right now in this market is demand destruction. Otherwise, just the amount of supplies that could be potentially at risk because of all these banking sanctions. We were supposed to get lists of banks that are exempt from SWIFT. And now there's been some headlines that EU countries are saying there won't be any exemptions. So nobody wants to take the risk of transacting with a Russian entity if you know those banking sanctions are going to be coming, or there's no clarification on who's going to be exempt. So absolutely right, it's unintended consequences, but huge ramifications.
So how many years, months, or years would it take to replace Russia's contribution to global oil production?
Well, Russia produces 10 million barrels per day. It exports about 10 and a half. It exports about half of that, 5.5. The problem is right now there isn't enough spare capacity in this world. Yes, Saudi Arabia has some, UAE has some, OPEC Plus as a whole has a little bit with their current deal, and they are meeting today. The issue is you cannot, if, this is not our base case, but if all of the Russian exports can't get to market, even if you exclude the pipeline that's still flowing, that is going to be well over 4 million barrels per day. And spare capacity is half of that. That's the problem. We can't replace it. We just don't have enough oil. We don't have enough investment.
And that's the point, folks. We don't have enough investment. I mean, Even before this whole thing with Russia started, the point is back in 2020, when all of these companies shut down, oil was the sector that was hit the most because the demand was totally zero, nil, shut down. Why? Nobody was traveling, nobody was flying, nobody was driving a car. Everybody is sit down. So, in order to prevent themselves from filing bankruptcy, all of these oil companies had to do is make sure they stop investing. They stop investing in production. Why? It doesn't make sense to keep producing oil, especially in a market in a world where nobody is gonna buy and use that oil. So back then, it made sense and smart for them to kind of survive, and that's what they did. But as the share price continued to grow. Now that we are going into COVID restrictions being totally lifted everywhere in the world, the demand is going to surge again. So oil was already destined to have triple digits prices on Wall Street even before Russia started. Now that Russia started, well, the fact that they are putting all of these sanctions on Russia and not targeting the Russia energy sector specifically on purpose, it is still doing the exact same thing if they went straight for the Russia sanctions on energy. Why? Russia is pretty much the wholesale store for a bunch of commodities in the world. They're producing natural gas and oil for pretty much the entire European countries. So now that in an environment where nobody's producing oil and the US is now trying to bring the price down because of course everybody's kind of eyeing inflation risk and making sure that as we get into the midterm elections a couple of months from now, they don't want price gases to soar because it's not good for their business. All right. So this is what they did, and this is what was announced on the State of Union yesterday. EIA member, this is the countries, the club of countries producing oil. They decided to make an extraordinary meeting yesterday, and they actually affirmed that they will flood the market with 60 million barrels from what we call, petroleum reserves, oil reserves. All right. Keep in mind that bunch of these countries and even companies usually have a lot of oil reserves, for strategic purposes, kind of this, crisis situation. So she said in a statement that President Joe Biden approved, this is Energy Secretary Jennifer Granholm, she approved a commitment of 30 million barrels, and the U.S. is ready to take additional measures if needed. So in total, when you actually count the 31 member countries of the EIA, the International Energy Agency, by agreeing to release 60 million barrels of oil from their strategic reserves, and half of that coming from the U.S. states, the U.S., it is still not going to be enough. You know what? You know why? Because 21 million barrels was just counted a couple of weeks ago from the consumption of the US alone. And this is higher than the pre pandemic level. So even before COVID hit, the demand was already high, and now it's going to go a lot more higher. It's not even spring yet. So people are not even traveling yet. And then imagine how the demand is already soaring. So what is 60 million going to do? Maybe sustain the market for what, 36 hours? It doesn't make any sense. And that's where you need to take advantage, people. That is where you need to take advantage of what I consider this to be a mistake, because Biden administration didn't want USA as a producer to actually, continue to produce. And as a result, we were depending on energy from Russia and China and the rest. But now that everybody is kind of, distancing themselves from Russia, and there is a competition with China, well, what are you going to do? Pretty much every measure, even the additional measures you're going to do, are not going to solve the issue. As a matter of fact, they're going to do the exact opposite given the current, market conditions and the environment I explained to you guys earlier. So consequence and bottom line is oil, high prices on oil are here to stay, at least for the foreseeable future. All right. Now, how to position yourself to make sure you gain advantage from this situation? Well, you need to invest in oil. Now, I'm going to share with you few stocks, five top, depending on what type of investor you want to be. If you want to look at stocks that have been kind of, that have the highest potential, so maybe you have the ability to double or even triple your money. Yes, you heard that right. Triple your money. Well, this is the number one candidate I have for you. Scallon Petroleum. This is a company that's run now here in Houston, Texas, and right now they're trading at $60 a share. But $60 a share and even $65 a share, which is the 52-week high, is not even taking into consideration the fact that oil is already trading at $110 a share. This price is considered to be when oil was still trading around 65 or $70 a share. So lots of appreciation to be here. If you zoom out on the chart here for the 5 year, it is supposed to be trading at these prices given what the barrel is trading 124. So 124 all the way back down to what we're looking at, this is a 53% chance in these tight markets where inflation is really a risk and nobody knows exactly what the Fed is going to do. I mean, 50% potential upside. It's big. All right. Now, another candidate, if you want to make big money on the very short term, Centennial Resource Development based on Oklahoma City here in the US. The price target here is at $11 a share, but $11 a share is still very on the price given the current prices of oil. So maybe 14, maybe 15, or maybe 20 when oil was still trading at just $100 a share in 2018. All right. So if you look at the high, upside potential, 61%. So this is for if you want to make the huge amount of money in the shortest amount of time. This will be your best two candidates. Now, if you want to have capital appreciation, your money to continue to grow while you gain significant passive income every single quarter, every single 3 months, this is your best candidate, Devon Energy. All right. The price target on this is, I think, around $67, but it doesn't take again into consideration the fact that oil is trading at 10, 14, 15 years high and is going to continue to do so. So you might think it's already been a little bit pricey, but the reality is this stock pays two types of dividends. So even if it goes back down a little bit, given what the market conditions are, it's kind of not worse or not as worse if you put your money elsewhere in tech, for example, or in travel. All right. So it pays a $1 per share. So if you own 1,000 shares, it is $1,000 every single quarter. But it has another variable dividend, which it's just incredible. So think about it if you want to have an incredible money coming from passive income. Another best candidate for passive income and capital appreciation will be Occidental Petroleum, based here in Houston, Texas. And if you look at the 5 year chart right now, they are just barely trading ahead of the pre-COVID levels. So if you go back to when you know tr- we had these current oil prices, we're looking at $83 a share. That is 42% up potential upside there, and they're also going to pay a hefty dividend starting in March. Now, if you want to have something that is very cheap given the share price, but also can be a lot more volatile, and is really, really undervalued now, I will consider looking into Grand Terra Energy. I mean, this is a stock that was one of the few stocks that were still trading below and lagging the upside, comeback that the whole sector experienced since 2021. So we are still barely trading a little bit ahead, of these pre-pandemic levels. But again, if you go back to where oil was trading at what is currently trading, and it's supposed to go even higher, you're looking at maybe, a 60% upside potential on your money. All right. So if you're afraid or if you think, okay, what is the risk? Well, the risk on this investment is, Russia and Ukraine deciding to hug each other starting tomorrow. Then it will definitely bring price of oil down a lot. But still, all of these prices of all of these stocks, are still very undervalued, even at a barrel trading at just $90 a share. That will be $20 per barrel downtrend from where we stand here. But given the current circumstances that I just laid down at the beginning of this video, it doesn't seem like it's going to stop anytime soon. So that's pretty much it, folks. Let me know in the comment section what you think, or if you have been trading these stocks. Oh, by the way, all of these stocks that are recommended, I've been trading them and owning them for the last 2.5 years. So I kind of know what I'm talking about when I give these recommendations.